Hello everyone, recapping Friday's session. Overall, it was a poor session for the market, but still, it'd be pretty early to be 100% certain that this rally has run out of legs and that we're going to go straight down. But overall, after the gap up, stocks sold off a little bit intraday. The NASDAQ still finished higher by 0.18%. Volume was higher than the session before, but with the intraday reversal, kind of had the feel of churning. Still, it's below average volume, so it's hard to get too bearish short term. Russell 2000 had a pretty decent session overall, 0.54%, leading the entire market. So that's good news. The bad news is that you don't want to see markets just rally every single day. You like to see them rally, consolidate, rally, consolidate, rally, consolidate. And that's healthier than just this straight little V-shaped pattern that we keep having on below average volume. The NYSE has reversed back below its 50-day moving average. The Dow Jones Industrial Average is still above it, but a heavier volume reversal. S&P 500, same situation. Remember, our models are still under an across-the-board sell signal, but on the very, very most short term, the S&P 500 and Dow Jones Industrial Average is under a soft neutral. And by soft, I mean very soft, because this rally attempt has been very, very lame. And now even more problematic are some of the reversals that we're seeing in the stocks that we're leading. Look at the utilities on Friday. Just carnage on huge volume. That's not a healthy pullback. It's not a pullback that instills confidence that this is just a quick sell-off and then we'll be right back to highs. It's very possible that we are, so we'll stay disciplined with our utility longs. But on an end-of-day basis, OGS is a 50% sell as it's closing below its 20-day moving average. So I'm moving half my sell stops up to 57.41. But overall, you can see stocks like AWK mirroring the XLU perfectly. Just some ugly, ugly action there. And then if you look at the gold miners, the gold stocks, you can see they didn't have a great day either. You can see the GDX is pulling back on heavier volume. That's its second clear distribution day in this uptrend. A healthier uptrend would just see us going higher with lower volume pullbacks than the accumulation days, which is technically what we have, but still kind of some vicious pullbacks. You can see in GG today, that's not healthy. It's not a good pullback. All that red, that huge distribution, it's just not good price action. So that's just the kind of market that we're in. Some stocks that were of interest today, FOXF, nice pocket pivot point signal off the low. Still, it's a giant, choppy, messy chart. But FOXF was interesting. ANIK followed through on its gains from the session before on Thursday. So I like what I see there. GDEN is a little small, but nice move. But if you look in the context of its overall trading, it's pretty crazy to think that this one would hold, even though it does have volume behind it, considering how it trades. But it probably will. But it's not going to be smooth. If anything, you can expect it to maybe, wedge up like Cray did. Or if you look at XRS, you can see how it wedged up and then what happened to its sell-off. And look at BMA, a perfect speculator scan stock. Been wedging higher, wedging. Not really a nice handle pattern. No nice pullback, just wedging higher. And now you have the heavier volume reversal. This is indicative of unhealthy action overall. And you can see calm reversed also. Perfect speculator stock. So we don't have great action out there, even in the stocks that are looking good, like Cray. It's wedging higher, bought one the wrong way. USCR, it's working on a handle, but that's pretty deep overall if you look at the pattern. Just a lot of work still left to be done by the market before you can get too bullish out there. Unfortunately, we did have one trade idea that just worked straight out of the gate, so I didn't take a short position. Now I'm kicking myself on it. MNOV went supernova on Thursday, issued it as a short sell signal intraday in the chat room. And on an end-of-day basis, I was thinking of going short. IB had shares, but instead I was going to wait for hopefully it would rally a little bit in the early morning, start to fade off the highs, and that's when I was going to go in using the highs as my final buy stop. Instead, it sold off immediately from the morning, making me wish that I would have done an end-of-day order, but this market just is pretty volatile and hard to trade, and I just don't trust signals unless they're perfect. So MNOV started to sell off immediately, and then by the time it broke down in the morning, the snapback rally did not take it back to previous support, which would now be resistance, and instead missed out on, at one point, almost a 15% gain in MNOV intraday. Ouch. Oh well, that's what this tape is going to do. You know, and it's hard when you want to go long or short M&OV when you just got done passing on SQNS, which I just want to remind everybody. In a market before 2008, I get this signal. Even with the stock up 13% on one day, I'm going to buy some. I'm buying some no matter what. But in this tape, I figure that anything that looks like this is going to be hit with an immediate reversal. It's been happening left and right everywhere. So why would this one work? And on day one, like I said, it appeared that was the case. But as we move on, it continues to look foolish. But I just want to remind everybody, in a strong uptrend where we're clearly washed out on the sell side, clearly accumulation's back in the market, we have stocks breaking out, SQNS is a new long signal. And if this was even 8 years ago, it's a no-brainer. It's an automatically long signal. But nowadays, we'd have to have a really good market to take something like that. But SQNS is just a lesson to learn, maybe, in the future. And that takes us to our new speculative new long position that I'm going to go ahead and attempt. GENC, this one's not perfect. The base isn't long enough. If you look here, one of the key traits I want in a smaller cap stock with a lot of green bop in it, with a lot of accumulation that's lower price, is the price to be at least touching the 20-day moving average. We don't have that here, so it's just going to be a completely speculative trade. To be honest with you, you want to really get long this thing around the 13 level, like 1301 would be the ideal limits. But, just in case the stock acts like they used to, this is the kind of pattern that's an automatic buy before 2008 no matter what, in a heavy amount even as thin as this thing is. If I can get 5 to 10% of my account in a limit order around 1336, I'm going to do my damnedest to try to do it. Then using 1296 as my first sell stop, 1260 is my second, then the ultimate last one would be 13. There's no way, 1210. So 1210, there's no way I'd let it go below 1210. So 1210, 1260, and 1296 would be my sell stops. As it is in this tape, Gen C will probably work because manufacturing, farming, construction, machinery stocks are working, but it probably won't be a smooth sailing. So first sell stop will be below 1296, and then one final one below 1210. If it was a larger position, I'd do 1296, 1260, 1210. But this is a pattern. Look at that volume surge. Look at what the volume surge does to the rest of the volume from the very start of its uptrend in September. It truncates it mightily. And you see BOP going from green to max green BOP. Huge volume, max green BOP, breakout to new highs. Any other time period, it's a good, nice long signal, even in a speculative name like GENC, which isn't that speculative. It's just very, very thin. You can see it averages about 20,000 shares per day. Now it's getting up there to around 30,000. It's too thin to take a large position in, but limit order only, 1336, not paying up to 1350. It's only going to be 0.5% of my account. I don't recommend this trade for anyone else. This is simply something that I just want to, get used to seeing again because SQNS worked. That's a pattern I normally would always have bought in the past, and GNC now is producing a similar pattern that I would always buy, but we'll keep it small. And as for stocks setting up in a possible viable pattern, that small cap MFRI, it's starting to make a very flat base pattern overall. I guess if you really want to be stupid, you could call this a cup with handle, a very short cup with handle, but cup with handle bases aren't that short. But still, look at all the green BOP since its gap up in December on huge volume. Held that level even despite that shakeout session. More huge volume, no volume during the pullback, and accumulation is back in the stock. Technically, would this be like a worthy early signal in any other market? Sure. Got a surge in BOP, got a surge in volume. Prices on the cusp of breakout. Yeah, sure. Why not go in for 0.5%? But in this tape, I just don't care. It'd be okay to miss. I just want to watch it and see how it acts. But MFRI is on watch. But as you notice, none of these are huge stocks. And another reason why I can't be too bullish here is look at JBSS. Not the most perfect breakout because, this move wasn't from a longer base, but this is a perfect kind of pattern. And as you can see, it hasn't gone very far before already losing its green BOP. BOP has gone yellow, big sell-off. So my first sell stop is now at the move below 63.20, and I'll keep 58.67 on the books until the stock actually closes below the 20-day moving average. And whatever on that session, if that happens, if and when that happens, that will become my final sell stop. But overall, market looks iffy, but we're really just range bound. February lows and the 50-day moving average basically is where we're at. S&P 500. I could say the December highs, February lows. That's that.